Okie dokie. Day after the election. Here is Top Step Combine only, just for execution purposes. And then I marked them on my 5-minute chart on the right side. First thing about today, we'll go over the hourly on the left. So, coming into the morning, huge gap up. Ginormous, okay? Gap up like this, probabilities are we continue higher, okay? We start pushing back coming into the open. Another thing to notice about today is we made an all-time high in the overnight session. The market likes to take those out in the day session most of the time. So gap up, all-time high in the overnight session. Two probabilities going into our favor to the long side. So I was just thinking, oh, also, once we break all-time highs like this, there's nothing up here to the left to stop us. There's no supply in the market. There's nothing to stop us. So another reason why I was expecting to at least go to the overnight high. Coming in the day, that was my expectation, the overnight high. And then I took this whole swing in the market here. That's not what I meant to do. I took this whole swing. I used a fib projection from the top to the bottom. And that gives us around 59.80 is the 127%. So my goal today was the high to 59.80. That was my expectation from the morning. Now we come on the 5-minute. Here we go. The a morning push out of the gate is a great bait to go the opposite direction the rest of the day. This is a pattern that occurs quite often, whether we go up or down off the first push. It sets up the buyers or sellers to push the other direction. So down here, there was a lot of people getting short, but it was really just a trap. So my plan today, I was targeting new highs and above, okay? And we pushed down off the open. My goal
The PFA bar timer
is to
threshold has been
buy
reached.
the first as soon as demand starts to form. I want to buy demand all the way up today, at least until we get to the target. So on the 5-minute, we have this green bar that forms. The next bar forms and closes. When that happens, this green bar becomes demand. Okay? So on this second up bar here, I place a buy, the top of this demand level, 59.05 or 59.09.50, and I have a stop below. Okay? Price comes back immediately, fills me in, and takes off. So, beautiful entry. You can't complain about those ones. My first targets in the market, I was expecting, for a bunch of reasons, like I said, to go higher, but there's still sellers in the market. There's supply up here. There's supply on these candles. Okay. So there's supply here, there's sellers here. Sellers did push us down off the open. I'm looking to take some profits in the zone. I take one off here, or I take two off at 59.25.75. I take one more off at 31.75 because we're coming into these sellers. We just retrace this whole move. We're gonna see a pullback at some point shortly, so I want to take profits. Plus, the market just gave me, like, what, 25 points just for free, kind of. So I'm going to take profits. Now, at this point, on this move down, I'm break even. Comes right here. Thought I might get stopped out. Kept me in the market. Fantastic. Just like down here, I bought this demand. I was looking for the next demand to form. The next demand forms on this up candle right here. So when this up candle closes, this I draw demand. So you take from the low, and then this is your demand candle here. So I draw to the close, which is right here. So this is the demand I had. So just like down here, I placed a buy order at the top to refill my position. Unfortunately, I got lucky down here. It kept me in this position. One tick, and it failed to fill me in this position. So that was unfortunate. And then it continues higher. So I'm just holding on to 2 contracts from the bottom. As we continue higher, we pause in this area. Now we pause on this up candle right here. This becomes demand. Okay. When we come, so I put a buy at the top. So I put a buy for 5 at the top, and I'm in a position of 2, right? So when I get filled on these, my average position is somewhere about here, and I'm break even, or I can get lunch if I get stopped out. Worst case scenario. So this forms demand from the low to the top of this tiny candle is the demand zone that I bought. The refilled position, have our position from right here, and we're break even. No stress in the market. And we start to move up. As we start to move up and getting closer to the all-time highs, anywhere past the all-time highs is when there could be sellers. We don't know. So I want to make sure I'm taking profits up into that point. So once we come here, we pause on this candle, create demand. Demand would be like this. Oh, you would miss another entry there, but I didn't want to. It's too high at this point. I'm not going to chase any more entries. But at this point, I trail prior bar lows. So this position right here, I just have my stop. Prior bar low, prior bar low, prior bar low, prior bar low, and it gets me out 5 contracts here. So now I'm left with 2 contracts from this position. We pause again here. Create demand on this up candle. Once we create this demand, I start trailing prior bar lows again. Prior bar low, prior bar low, and it stops me out on this down candle. 1 more contract. So now I'm in 1 contract from this position. We sit through all this, eventually go higher and form demand. On this push higher, we hit the new highs. We met our expectation. We're at 59.60, which is close enough to 59.80, just kind of guessing off a fib zone. So I'm going to do the same thing. Trail prior bar lows, trail prior bar lows, trail prior bar lows, and I get out on this down candle here. So by having an expectation in the market, buying demand when it shows you, when the buyers show you they won, buying it, and today we didn't look back. And there are plenty of clues that would be the case. So we were able to capture, about this much of the day. We left this much on the table. And we only took 2 ticks of heat. So can't ask for better. Let me know if you have any questions.